Here's another big company that reported some. It's got lots of different segments and it reported some earnings in them. Berkshire Hathaway. This is always interesting. No one really cares what Berkshire Hathaway does earnings-wise. What they care about is what Warren Buffett's saying. But here is what the kind of earnings looked like. Revenue from the year was $302 billion. That was up from $276 billion. EPS, well, they like adjusting things as well, but here's the unadjusted EPS. With all that revenue, they managed to lose $10.36 a share. This is per B share, not per A share, which is, I didn't bother working it out for A shares because it isn't relevant to anyone. Previously, they made $39 a share. If you remove out the effect of all their portfolio moving around, because they have to run that through the income statement, and the fact that a bunch of their stocks have gone down weighs on their net income, even though in many ways it's not, in every way, it's not a kind of cash charge. They haven't sold any of these things. They still have them. They're still kind of sat there. I make it that they made probably around $21 in profit when I try to add it back. Where'd that come from then? So insurance underwriting was a 90 million loss this time, mostly due to worse car insurance stuff. I think that might be partly inflationary. When we do our episode on insurance companies, and we will one day, maybe, who knows, when Paul's not around. Oh, he's not around now, but when we stop finding things that we're interested in earnings-wise, we'll talk about why inflation is generally bad for insurance companies. It makes repairs more expensive, makes replacements more expensive, makes everything else more expensive. That wasn't something that was immediately obvious to me until kind of quite recently. But insurance investment income was $6.4 billion versus $4.8 billion. That's because higher interest rates, basically. They keep that float partly in bonds and T-bills, because you can't just go and lump your entire insurance float into stocks or on Tesla and then find you haven't got any money to pay stuff out. So higher rates on that basically did better. Railroad did exactly what it did last year, almost exactly. Higher revenue per unit versus lower volumes and higher fuel costs. Utilities business was $3.9 billion versus $3.6 billion. And the manufacturing services retailing stuff, so basically See's Candy, brought in $12.5 billion all by itself, mostly sold to Warren Buffett and Charlie Munger. So $12.5 billion versus $11.1 before. So all of that stuff, that big segment, brings in sort of quite a lot there. It was mostly kind of fine. Buffett described his special sauce. If Paul was here, he'd be telling you it was about dividends. It wasn't about dividends. It was the opposite of that. He said that people who don't like buybacks are economic illiterates. And it was generally quite a fun report. It's fine. They'll keep doing the same thing next year. It's not like the company doesn't have loads of cash. It's not like the stock's terribly expensive. It never is. It's never terribly cheap either, because you know full well that they're not going to do certain things. One of the things they're not going to do is blow themselves up. Another thing they're not going to do is grow massively either.
It was a pretty interesting take. I sent you a YouTube video midweek, Steve. I don't know if you had a chance to watch it yet, but
yep.
it was quite funny to see that in the video, who thou shall not be named managed to say that this is definitely showing that Buffett is interested in dividend-paying companies, when you only had to read the report to realise that that's really not the only thing he's interested in. But yeah, I mean, the cash pile, Steve, back up another to 130 billion, even though he spent a little bit of it recently, hadn't he? On was it Allegheny did they buy that with?
Yep,
cash.
I bought Allegheny with cash,
and it's back up to essentially where it was before. Do you think there's something? You think he's looking for something else? Or?
It's kind of tough to tell, isn't it? I mean, some of the acquisitions recently have been sort of unspectacular things. There's not been another let's add a massive new kind of big part to our portfolio. Before Allegheny, it was some natural gas pipes, which has turned out to be a really good investment. He'd been buying a load of Occidental, and that's been making its way up there, but I don't think there's anything massive on the horizon here, but I do wonder. I always sort of wonder with the cash building up in this, and exactly kind of what might come of that. Yeah, the point about dividends is not kind of lost on me. I'm fascinated by the way people see what they kind of want to see when it comes to thinking about Buffett on this.
Yeah, absolutely. I just sort of like, I know he wants a bulletproof balance sheet, but I wonder how much of like 120 billion is probably too much, because if he wants to go and buy a bank or something crazy like that when the next financial crisis hits, I reckon 120 billion would buy a few of them the way they're levered up at the moment. So
yeah.
Unless he wants to go buy Silvergate, he could probably get that for about 58, I think it's 12 2 pence. Was it 2 pence on the dollar or 12 pence on the dollar? I can't remember. They've also got 15% corporate bond out at the moment, see that they're trying to shore up their balance sheet with. And
Are they?
I don't think there's many people interested in that at the moment.
No, last company I saw with one of those was Matalan, which is basically bust. And a good sign that, incidentally, this low-cost Costco model of charge people a quid to shop there and then sell them stuff for less doesn't work for everything.
No, not for rubbish clothes. So that was interesting, Steve. I've read the letter. I had a look through the earnings. I haven't listened to anything he's had to say on it yet, but I didn't really think there was, from the other people's analysis, I didn't think there was an awful lot in this one. I did see that somebody tweeted retweeted their tweet from the last earnings call and said, "No, this is the worst earnings call I've ever had in terms of information from Buffett." So why do you think he's keeping his cards close to his chest?
I think that's the natural way that they have of doing things now. I mean, Buffett tends to not be a big fan of broadcasting what they own, and in fairness, I sort of find that admirable. Compare that to Cathy Wood, who is busy telling you whether or not anyone's listening anymore, what she's buying, what she's selling, all of the time. She very much plays with her hand kind of face up. Buffett, I think, if I were in Buffett's shoes, I would find it very tempting to just say, when somebody asked me, I'm thinking about buying a load of this stuff, or we just bought a load of this stuff, and then watch the price go, because you could truthfully say, yes, we've just made a massive investment in Visa or something, and watch everyone go and pile themselves into Visa as we go, and then just wriggle out of it again. Get Mark Millard doing something for once,
just for a laugh.
Yeah,
just see what weird stuff you can get people to follow you into.
I kind of like that though. People were saying the other day there was an interview with Todd Combs. That's what I meant to say. They weren't managers, and after that, people said they'd kind of like worked out the Berkshire Hathaway formula for buying stocks. So they had trading, because he talked about stocks that were trading under a 15 PE, at a 15 PE, which people confused to mean not under, which was clearly wrong. And is going to be, with I think 90% conviction, in a better place in 5 years' time, and has a 50% chance to compound at 7% going forward. Okay, so that solves for a few things. And people thought, great, that is it, that is the Buffett formula. And then you look at Berkshire's portfolio, and it's got Amazon in it, that's never been true of that. It's got Snowflake in it, it's absolutely never been true of that. I don't know that it's ever been true of Stoneco particularly. It may be true of Stoneco now, but it wasn't when they bought it. The idea that that's how they pick stocks to buy is, I mean, it looks like a straightforward look at that portfolio tells you that's not true.
Yeah, it was the same with the video that I sent you midweek where they said that Buffett will never buy anything that's diluting. I think, has he not looked at Snowflake and Amazon for a long time? Because it probably trebled in share count since the last time he was interested by it, especially Snowflake. I think stock-based comp for Snowflake was about 30% of revenue, never mind profits. So, yeah, interesting.